Oh boy. Welcome back to Strongman Personal Finance. We got an exciting episode today. We're going to talk about a new hot stock. And this is not a paid video. This is just me making a video about what I want. We're going to talk about
C3.AI, it's the future, bro. ChatGPT, Elon Musk, bye.
So first there was EV stocks. That bubble basically popped, except for Tesla. Everybody got bored of that. And now they're moving on to the newest clownist trends. The newest clown trend. AI. Everything's about AI. If a company says AI, futuristic disruption, their stock goes to the freaking moon, okay? This is a tale as old as time. There are going to be so many clown stocks that are going to pop up, all with AI in their freaking name. I guarantee you. You want to know why? Because retail morons like you, and yeah, I'm talking to you. I know you just went all in C3.AI. A bunch of clowns like you will pay whatever price you have to pay for a stock if it says AI or disruption in it, regardless of how much of a freaking clown stock it is. For example, this company, C3.AI, is absolute hot, disgusting trash. Let's go look at this clownish stock that's apparently getting popular with retail. And you know when a stock is popular with retail, it's probably a hot disaster, okay? So let's see what the stock has done. Oh, over the past year, it's up 83%. I wonder why retail likes it. So it's up, and it's called AI. Ticker symbol AI. Man, that's a stroke of genius right there. But recently, it's gone down 7%. How freaking sad is that? Okay, let's read about this company. It operates as an enterprise artificial intelligence software company. It's probably just a software company. In the North American, Europe, Middle East, Africa, Asia, Pacific, and internationally. Okay, hold on a minute. If it's a North American-based company, Europe, Middle East, Africa, and Asia Pacific are international. This is not like an extra. There's not something more international than the Middle East, Africa, and Asia Pacific. I don't understand that. It provides C3.AI application platform, an application development and runtime environment that enables customers to design, develop, and deploys enterprise AI applications. Blah, 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 blah. Okay, something AI. Now, does that tell me anything about this company? No. But you know what I can tell about this company? Some basic fundamentals that you guys need to be reminded of, okay? First of all, $3 billion market cap on revenue of $266. That is a very high price to sales ratio, okay? This is a very expensive, you might call it, company. Price to sales of 13, and it's actually gone up pretty significantly from the last couple of quarters. Price to books, 3. Current ratio, 7. Oh, that's good. And a negative PE ratio. What a shock, okay? Net income is the same as revenue, except net income is negative. The losses are equivalent to the revenue. Oh my God. Analysts say hold with a price target of $25. It's currently $32.26, but it's gone up a lot, right? So it's a good stock. So let's go ahead and dive into some of the numbers. First thing, revenue. So AI is the future. AI is disruptive. AI is going to change the world. This company's revenue is flat. Okay, it's gone up over the last couple of years. I mean, it's gone up. It's inching its way up. But over the last year, it's basically stagnated and started to go down. That's interesting. It's actually contracting. Let's look at shares outstanding. Are they issuing shares? Oh, yes, they are. I wonder why. Could it be because they're burning cash? Well, we'll see about that. Maybe they have stock-based compensation. But they're definitely issuing shares. Gross margin is going down. Operating margin is negative 100%. I can see why retail loves this stock. Negative 94% profit margin for the last quarter and a free cash flow margin of negative 107. How do you get you must have to try to get numbers this bad to just be absolutely this terrible at freaking everything, okay? Flat declining revenue and god-awful margins that aren't improving in the slightest and shares outstanding increasing. What more could go wrong? Okay, let's go look at the statement of cash flows. Look at the balance sheet on their most recent report. I don't like this website for the balance sheet. Okay, so negative net income and negative operating cash flow. So a lot of these software companies, I make fun of them, right? at least some of these companies have positive operating cash flow. Like Palantir, for example. Palantir generates positive cash flow, and they're not going bankrupt. Not in the freaking slightest, okay? This company has literally nothing going for it. It burns cash. $52 million burned in the last 3 months. And it's not getting better. It's getting worse. On top of that, they have to put money into capital expenditures, which they've gone on a spending spree. Why? I don't know what they're buying. We'll go look at the balance sheet and see. Share issuance. Oh, look at that. They're issuing shares. Debt. Did they issue any debt? Okay, it looks like they took on some debt in 2020. And everything just looks bad. Okay, let's go ahead and check out. So this is their website, right? So what clowns will do is they'll go on their website and they'll say,
Oh, it's AI. Oh, it's in a lot of look at the industries they serve. Manufacturing, oil, healthcare. Oh my god, it's so diversified. Let's go look at their customers. Oh my god, the military, Shell. Oh my god. How can you possibly go wrong? Oh, this chick, she's kind of hot. Yeah, maybe she's a good stock after all, okay?
but let's go look at their most recent report. So they filed this 8K, which is like an announcement of like a material event. At least that's what I remember they are. But here they said, okay, we released our financial results for the fiscal fourth quarter and full fiscal year ended April 30th, 2023. So let's go ahead and check out the balance sheet. I just want to see what's going on with their balance sheet. The website sucks. I don't like using stunk analysis. First, let's look at the income statement in a little bit more detail. Okay. So we see subscription revenue is basically flat. Professional services year over year has gone down. That's definitely the same and professional services is definitely going down year over year. Okay. But they have declining revenue, massive declining revenue in professional services, and subscription revenue is going nowhere. Okay. Let's see their gross profit on subscription revenue. They have a gross profit. I'll give them that for subscription revenue at least. 23,872 divided by 56,866. So their gross profit for subscriptions is 58% in the most recent quarter. Last year it was divided by 56,302. So their gross profit is massively declining as well. Okay, so even if they grow their subscription revenue, guess what? Their profit margins are massively contracting. It's their costs. They're probably going out of control. Okay, so their margins are absolutely collapsing, which is awful. Sales and marketing. They spent $51 million on sales and marketing on revenue of $72 million. That is like 3/4 of their revenue on sales and marketing. What are they spending the money on?
Oh, and we're AI is the future, bro. Oh.
Research and development, 49. Okay, maybe that leads somewhere, maybe it doesn't. General and admin, 19 million. So their loss from operations is 73 million. Oh, but they have some interest income. Wow. Do they just have a bunch of cash sitting in treasuries on the balance sheet? Whoa. Sounds like Palantir, doesn't it? And massive loss. Absolutely freaking horrible. Okay, let's look at their balance sheet. Now, this is a comparative balance sheet for April 30th, 2022 versus April 30th, 2023. Let's see if anything stands out to me. So cash is down. Short-term investments are down pretty significantly. Where did the cash go? I don't know. Receivables is up. That's interesting. So their accounts receivable is up, but their revenue is flat. I don't know what to think about that one. Total current assets are down. Property, plant, and equipment is okay. So they definitely made some investments in property, plant, and equipment. No new acquisitions. Long-term investments. Okay, they plowed about $50 million into that. So basically they spent, about $70 million on property, plant, and equipment, and they put the remainder of their cash investments into long-term investments. But overall, their total assets have gone down by about $70 million. Let's look at their debts. Accounts payable down, accrued liabilities. Okay, so their current ratio is fine. Like they're not going to go out of business within the next year, but that's not the problem with this company. Deferred revenue non-current has massively collapsed. Okay, so their long-term sales don't look that good, at least compared to the prior year. And their total liability. So overall, like their balance sheet, it's not the worst in the world. Okay, they're not going to go out of business, but that doesn't mean you're going to get great positive returns. because this company is just a share diluting clown stock. It's massively unprofitable. Common stock is up. Additional paid-in capital is up. That means they're issuing shares. And accumulated deficit has gotten worse, so they're losing money hand over fist. So their total stockholders' equity, despite issuing tons of shares, is still going down. Okay, let's look at the statement of cash flows. They burned in the fiscal year April 30th, 2023, $115 million of cash from operations. $115 million of cash incinerated in the core operations of the business. And they have stock-based compensation expense of $216 million. So their stock-based compensation is roughly, oh my God. Hold on a minute. 216 on 266 of revenue. That's like what, 90% of their revenue is eaten up by stock-based compensation? Oh my God. Oh, what a clown stock, man. Like, and you clowns are buying this, okay? You absolute freaking clowns are buying this. Okay, so we have stock-based compensation, adjustments for current assets, current liabilities. Let's see what they bought. They invested some money into property, plant, equipment, a little bit of software, bought a bunch of investments, and investments matured. So overall, they basically just burned a bunch of cash, and then they plowed $70 million more into investments. Let's look at the financing. Proceeds from exercise of common A stock options, which is going to go up because the stock price has gone up. Stock options, taxes paid relative to net equity awards. Okay, so basically they generated a little bit of cash, very small, like $621,000 of positive cash flow from financing through employees exercising stock options. This is a clown stock, okay? This stock is an absolute freaking joke. Let's go look at the statement of changes in stockholders' equity if they have it on here. I want to see a little bit more detail on how bad the dilution actually is. Let's see. Oh, God. Oh, and of course they have non-GAAP. Of course they do. I mean, we can see how much the shares changed over time, at least, if they're freaking hiding all that details. Okay, so share issuance. So they issued about 8 million shares in the course of a year. 8 million shares on 102 million. And they have 1 billion shares authorized. 1 billion shares could potentially be created and given out to the public. And I 100% foresee this company continuing to issue more and more and more and more and more shares to dilute and dilute and dilute. This company is hot garbage. Why is the stock going up? Can somebody explain that to me? Maybe because it's just some AI clown bubble. Maybe that's the case. Yeah, that's what it is, okay? All these stunts that are going up because everybody, AI, it's a massive joke. It's a freaking joke. This company is a clown stock. If you are buying this, I don't care if the stock goes up. This is the same thing that happened with Tattooed Chef, the plant-based revolution, and all these other stupid bubbles. Neo with EVs. It's the same crap, okay? It's the future. Stock goes up. Morons buy it. I tell them it's a clown stock. It's obviously a clown stock. There's no debate. This is a clown stock. And eventually the bubble pops and the stock collapses. And all the retail clowns just move on to the next clown stock. Come on, guys. If somebody's pumping this on YouTube, do not listen to them. Unsubscribe right freaking now. Comments first. But this stock it went up a lot, bro. Maybe this time you're wrong about
AI, negative cash flows, massive share dilution, AI.
Strong, man. Bro's crying because C3.AI has outperformed VT. Yes, you should buy it. I love when clown stocks outperform a total market index. I love it. It just reinforces to me how clownish the whole investment community is. If somebody makes their career out of investing, I just don't trust that person, okay? Because this is such a clownish industry where garbage goes up massively. And people bump the biggest garbage. And when it goes down, they just pretend like it never happened. And then they just move on to the next clown stock.
UAI path is light years ahead of C3.AI. No. C3.AI is the future.
VT 11 years for... Yeah, buy a worthless freaking coin. A string of 1 and 0s. Yeah, because it went up more. To be fair, all FANF companies had revenue stagnant or low compared to last year. Buy the dip, bro. Just they always go up. Buy QQQ. They plan to be gap. Oh, no. They are no way, dude. There's no way that they're going to be profitable by 2024. Are you kidding? With stagnating revenues and massive and negative 100% operating margins. Really? And massive negative cash flows. You're telling me in less than a year they're going to be profitable. That's insanity. Okay, you're being lied to.
AI.
Please do follow up on the stock mode. Neo is going to $200. Oh, he's so lame, man. The future! Wreck up on the flat means low quality earnings or some creativity from management. Oh, receivables up on flat revenue means low quality. Yeah. Something's fishy. I don't know what to think about that. It's almost like they could be accruing revenue to make it seem like it's better than it actually is. Because you can make up, you can make up revenue in accounting, right? I mean, you get audited, of course, and they could catch that. But you can make up revenue. You can just debit account receivable, credit revenue, and boom, you've got revenue. You can do that. Now, eventually you get caught because you have this massive balance that keeps building up in the receivables account. And it's like, why is that receivable account so big? I don't understand. Or, a lot of companies can hide expenses in prepaid accounts or receivable accounts. They just dump them in there and they leave them there. And people, wow, look at that revenue. It's going up so big. And then they never seem to collect the cash. A lot of the customers don't pay. Wow. I wonder what's going on here. I'm not saying there's fraud going on, but that's pretty sketchy. That massive receivables balance. Like I said, they could be just accruing revenue. C3.AI, 30% short. Oh, man, that's going to be a winner right there. Will you sell all your VT if it 10x's tomorrow? Yeah, that's a tough question. Well, if that happens, that means inflation is out of control, so probably not. Well, $48 more and you can have your video there, buddy. The economic ninja. Sounds like a moron. Boring video. GPT will do weak man's account. Yeah, no. I'm going to make a dedicated video about that. That ain't happening. I think a big company started AICP3 as a subsidiary that spun off. I don't even care about the background of this company. It's such a clown stock. Neo was a 30 bagger, though. Just don't. Everything's a 30 bagger, bro. As long as you sell it at the perfect time. You buy it and you sell it at the perfect time, bro. Strawman, what's your opinion on covered call ETFs? You trade income for reduced long-term gains and higher taxes. No thanks. What'd you say about It's a bond fund. That's what Palantir is. We are at the iPhone moment of AI. Jensen Huge Dong Huang. Oh my God. There's always something like, I hate the investing community. Tattoo shall concede by adding AI. Yeah, honestly, it probably could. Someone should pay for Pal. You should, screw college. Pay me that money. The growth for AI is exponential. I'm kidding, but that is the case behind there's always a case behind the hype, and then they have negative 100% operating margins. Weak boy, you need to work on your shoulders. Start lifting. Yeah, that's right. I'm thin, weak. C3.AI is actually taking shareholder money and putting it to a giant whole life policy. Well, in that case, you should probably buy it then. It's a good deal. I would hope we've evolved from the days that analysts refuse to question Enron's free cash flow, but I don't. Dude, analysts are morons. They don't even understand accounting. They'll look at a balance sheet and be like, well, it looks good. Everything looks right. Massive receivables balance. Stagnating revenue. Everything's good. Moaz tomorrow. Lack of free cash flow. Can you say Chat GPT?
Chat GPT AI. Chat GPT AI.
All right, verdict. Clown stock. That is all. Have a wonderful day.